Hello viewers and investors, my name is Sunita and you are watching my YouTube channel Sunshine Stocks. First of all, wish you all a very happy new year. It is mentioned in the recent Reuters article that in the month of November, infrastructure activities have increased in India. That means the momentum is picking up. This is what we were discussing in the previous video and I would like to continue the discussion further. Please note, this video is only for educational purpose. In the last video, I mentioned the key metrics to be used to filter out good stocks. Infra projects are time-bound, intense, labor-oriented and require a lot of machinery and equipment to execute this project. Hence, the key metrics are totally different from other sectors like finance, NBFC or IT. That's why I gave importance to these metrics. You can pause and read it. So based on this, I have grouped them into 5. First, profitability ratio. I consider return on equity, return on asset, net profit, CAGR, that is compounded annual growth return of both sales and profit for 3 years. If it is more than 15%, it is considered a good stock. Next, leverage ratio. Here I consider interest coverage ratio and debt equity ratio. Interest coverage ratio is to determine how much the company is earning relative to the interest burden of the company. Interest coverage ratio above 2 is considered as an acceptable range. It is calculated by dividing EBIT, that is earning before interest and taxes, by total interest expenses. The debt to equity ratio, if it is less than 1, it's considered to be a good stock. But in this industry, less than 1 is very difficult to find as companies take loan to execute the projects in time. Hence, we consider up to 2. Valuation of the stock. Here we consider EPS, price to earnings, industry PE, PEG ratio, that is price to earning versus growth ratio, and Piotrowski score. This is important to determine the strength of the company's financial position and operational efficiency. It is measured in 0 to 9 point scale, with 0 being worse and 9 being excellent. So the score is, if it is more than 7, it is considered to be a good company, great company. It is more than 5, it is good to consider for investing. The corporate governance of the company, that is the top management, their vision, stability, also arbitration and litigation. Because these companies are dealing with central government, state governments and many contractors, we can anticipate litigations or arbitrations in any of the projects. Lastly, order book and the future outlook of the company. With these details, let's go to the screener and apply these metrics. I have already created a screener to save time. And you can see these ratios are included here, including net block. This is the one you are going to see here, those columns. Now I am going to add some filters here. So the filters would be market capitalization is more than 1000 and Piotrowski score is more than 5. Debt to equity ratio is less than 2. When I use this and run this query, what result I will get? You see that around 770 results you can find. From that, go to industry and select only infrastructure and engineering stocks alone. I will get 37 stocks out of this 770 stocks. From this 37 stocks, I am going to consider only 10 stocks that are related to road infrastructure, bridges and tunnel. I hope you understand. So these are all the 37 stocks and from that I am going to select 10 stocks. Alright. Our first stock is NBCC. It's a Navratna company, focuses on project management consultancy, engineering, procurement and EPC contracting. Also into real estate development. It has been involved in numerous landmark projects across India and has a strong presence in the global market, particularly in the Middle East and Africa. Market cap is 25,215 crores. It's a mid-cap company. Current market price is 91.5, EPS 1.75, return on equity 24.8%, return on asset 4.16%. 3 years profit growth is 14% and 3 years CAGR of sales is 32%. If you see the debt, it's only 0.41 crore, that is 41 lakhs. It's equivalent to nothing for the kind of a market cap the company has. So debt to equity ratio is also come as 0. Interest coverage ratio is 15,559, it's because of the zero debt. Stock P is 45.4, industry P 33.7, PEG ratio 6.81. Pietro's score is 8, which is very good. Intrinsic value is 26.5, price to book ratio is 10.8. All other ratios seems to be a little bit on the higher side. That makes a stock a little overvalued. Group total order book is 84,400 crores. NBCC alone 70,400 crores. 92% revenue comes from PMC, 6% from construction activities and 2% from real estate business. That's why net block is also very less and the debt is also very less. Company has plans to expand real estate business using its own land. Company's ROC is 32%, ROE 24%. This year sales is 11,051 crore. If we compare company's revenues with the trailing 12 months revenue, it's increasing. Zero interest payment and the net profit is also increasing. FII and DIA holdings are good. This is a company's total order and they are doing business in other countries also. Now this is a very important information. PB ratio is 10.08. On the other hand, what the management says is that they have a lot of land parcels in Jaipur, Mumbai, Kochi, Coimbatore and Mauritius. They got another 32 acres of land also. They want to develop as a real estate property. This real estate property will fetch them 4,000 crore of rupees. For this land, the book value is only 195 crores, but the actual value would be 4,000 crore after development. So this will bring down the price to book ratio to a much lesser level. That makes the company an undervalued high growth company. In all possible ways, it seems to be a very promising company. Let's have a look at the technical analysis of the chart. As of now, the stock is trading near 90, so the next support is somewhat near 82. It has got a strong resistance at 103. If it crosses 103 and sustain, it may go up to 119, next 139 and then 152. More than 50% upside in the near term. But if you see, there are a lot of buying activities also happening in this area, that is from the beginning of 2024 till date. You can do further analysis on this stock before buying or selling. Let's look at the next stock. Stock number 2, L&T, Larsen and Toubro. It's a major Indian multinational conglomerate. It is involved in the EPC business. Other businesses are technology, financial services and manufacturing. It has a very wide range of projects including infrastructure development, power generation and defense. It is one of the largest and most respected companies in India's private sector. It's a Nifty 50 company. Market cap is 4,96,136 crore. Current market price is 3,608. EPS 71, return on equity 12.8%, return on assets 4.73%. 3 years profit CAGR is minus 14%. This is a standalone return. And 3 year sales CAGR is 13%. After making good sales also, the profit is not increasing. Why? Because of their debt and interest burden. Still, the debt equity ratio is okay, 0.36. Interest coverage ratio is also good. Stock PE is 51, industry PE is 32.8, PEG ratio 7.2, Piotrowski score is 5. Just okay. Intrinsic value is 893, PB ratio 7.52. By all parameters, the stock seemed to be overvalued. Asset owned by the company is good. Company has plant and machinery worth 10,922 crores. There is one arbitration case is going on versus BMC. Order book is around 3 trillion rupees. Major play in Indian infrastructure scheme of Gati Shakti and Bharatmala. If you don't know what is Gati Shakti and Bharatmala, you can go back to my previous video and check there. Either you can press the I button here or click the playlist. Company is expecting 7 lakh crore from domestic orders and 5 lakh crore from international orders. Company has got a presence in almost all sectors. Decline in global orders is due to wars. ROCE and ROE of the company seems to be good. Other ratios you can pause and read. Sales is increasing. Profit is also increased. It is a professionally managed company like HDFC. If you read company's quarterly results and con call, you can get more information about the company. Basically, it has got a strong presence in almost every segment of India's growth, be it road, water, power, or other infra. Company has got strong execution skills and stable margins, promising projects in manufacturing and defense. Executing these kind of huge projects will always cause a delays due to many reasons. Labor shortage, monsoon, government intervention and skilled engineer shortage. As per the chairman, the company is facing 45,000 labor shortage and a shortage of 14,000 engineers. If the company fix this problem only, the bottom line will increase. If you look at the technical chart of the company, it is struggling to break the strong resistance of 3,852. As of now, the stock price is falling. If it comes down, it has got a strong support at 3,437 and then 3,270. If the quarterly results and the budget are impressive, the stock may go up to 4,600 level. If it is not impressive, it will come down to the support level. You can keep this stock on your watch list. This stock is particularly good because it is a market leader and it is a Nifty 50 company. People who don't want to invest in small cap or in a mid cap companies can add this particular stock in your watch list and monitor. The next stock is KNR Construction Limited. It is an infrastructure development company having projects in roads, bridges, flyovers and irrigation. It is one of the pioneers in executing EPC projects. Market capital 8,866 crore. It is a small cap company. Current market price 315, EPS 39.4, return on equity 23.7%, return on assets 10.2%. Profit CAGR 32.8, sales CAGR 15.1%. Its debt is 1,404 crores. Debt to equity ratio is 0.34. Interest coverage ratio 8.92, which is really good. Stock PE 8.11, industry PE 24.8. PEG ratio 0.34. Piotrowski score is 6. Intrinsic value 893. PB ratio 7.58. Company has got a very good net asset block of 515 crore. An arbitration amount of 28 crores received from Orissa projects. Overall, if you see all the metrics, I feel it is an undervalued good stock except for the debts. And they have got an excellent order book of 4,406 crores. Company's market capital is only 8,800 crores. Almost 50% of the market cap they have got as an order. They are expecting another 8,000 crores order in another 6 months. Means 100% growth of market capital is expected in the coming months. Order breakup 52% from EPC, 23% from irrigation, 25% from pipe. Now the big challenge is when these kind of small cap companies getting bigger order like this, their operation efficiency and timely execution of the order will become a great challenge. Visa L&T situation, I hope KNR is prepared to execute these kind of big orders and will handle the pressure. See their order breakup, region wise and segment wise, pipeline projects. And the company has many in-house construction equipment. That's an advantage for this company. ROCE and ROE seems to be really good. More than 20% is considered to be a good ratio. And the trailing 12 months profit is also increasing. Sales is increasing, profit is also increasing. Operating profit margin is 33%, which is a very high profit margin. The company has to concentrate on reducing debt and the interest payment. FII and DI's participations are really good for this company, especially if you look at a mutual fund house participation. Almost all mutual fund companies are having a stake with KNR Construction. These many projects are going on right now and they are into HAM project. Most of them are road projects. Have a look at their technical chart. Stock is trading near 345 at the resistance level. If the stock price breaks out, the next level would be 428. I feel this is a very good company, diversified segment and a huge order book, and the metrics are really good. All seems to be working for them. You need to watch and find out more on this particular stock. With this, it's time to wind up for today's video. I believe I have brought you some valuable information. I will discuss about other stocks in the next video. The next part is also ready and will be released shortly. Please like, comment, press the bell icon and share this video with your friends and family. Thank you so much.